We are talking the ultimate safe havens in this time of crisis. And for my next guest, that reassurance lies in Bitcoin. He even thinks it could go to $100,000. Anthony Pompliano, known as Pomp on Twitter, is an American entrepreneur, investor, a former U.S. Army veteran. He's also the co-founder and managing partner of Full Tilt Capital and Morgan Creek Digital Assets. And he's the host of the Pomp Podcast. He joins me now. Anthony, nice to finally meet you. I've been following you on Twitter for years. So welcome to the show.
Absolutely. Thanks so much for having me.
How are you? First off, before we get into the interview, how are you holding up with, remote working and this, self-isolation and all that? How's it going for you?
Yeah, things are great. I think most people who are involved in a lot of the lines of business that we are already were pretty familiar with remote work, and so really no change of course there. Obviously, not everyone is fortunate enough to be able to do that, but for us, hasn't been so disruptive, and so we're kind of business as usual.
Yeah, I guess you're right. Same here. I've been used to working remotely and under varying degrees of conditions. So I want to just dive into it here. I listened to one of your podcasts from March 20th, where you gave a score to Bitcoin, oil, gold, equities. So you rated Bitcoin an 11 on 10, equities 8 on 10, oil 5 on 10. At the bottom of the list is gold at a 3 on 10. So I want to understand your rankings here, because yesterday we saw that stocks had the worst first quarter ever. Bitcoin is down 10%, yet gold, Anthony, last man or woman standing, up 4%. Still one of the best performing assets out there.
For sure. So I think part of this is a lot of the analysis that I'm doing is looking out over the next 2 years or so, right? So I don't really worry about kind of short-term price performance. Instead, much more interested in the long-term, medium to long-term price performance. And the reason why I kind of rated the things I did was take gold to start with. It's very stable. It's done the job that a lot of people want it to do, but that volatility works in its favor in times of market drawdowns, but it works against it in times of market recovery, meaning that you just don't get a lot of volatility in gold. And so what I said was over the next 2 years, given all of the quantitative easing, kind of the inflation hedge aspect of gold, I could see us moving into kind of the $2,000 to $2,500 range for gold. But that's just not a very material increase in value compared to what I think other assets will do from here. And so if you then look at something on the other end of the spectrum like Bitcoin, Bitcoin's incredibly volatile. It drew down 50% at one point. It's down 30% or so, depending on what date you look at. But over a year-long period, it's still up, 35, 50%, depending on when you go back to. And over the next 2 years, I think that it'll have hundreds of percent of appreciation given the quantitative easing and the volatility it brings. And so it's less about kind of what's happened in the past, and it's much more about forward looking. What do I think will happen to that asset given the environment we're going to?
Okay, so you invite volatility. You want assets with this volatility.
Well, volatility, I think, gets a bad rap because it has this negative connotation to it. But in order to get outsized returns, you need high levels of volatility. So I always say that volatility works in both ways, up and down. And so if you look at, the best performing stocks over the last decade or 20 years, they have high levels of volatility. And that volatility actually leads to outsized gains. Now, it can work against you in that it also can lead to large losses. But if you generally think something over a long period of time is going to appreciate in price, and it has high levels of volatility, that appreciation in price is likely to be very large. And so I think that's where something like Bitcoin actually, it works to its advantage versus gold, which is much more stable, much more liquid, and much less volatile.
Now, I know you've had many debates with Peter Schiff, a well-known gold bug on this topic. But could you not see room for both assets in a portfolio? Wouldn't you just have Bitcoin and gold, Anthony?
Yeah, so that's actually my argument is, we're in this kind of deflationary environment where there's a liquidity crunch, the dollar strengthening. Obviously, there will be kind of manipulation of the market and flooding of the market with dollars will actually systematically weaken the dollar. And you'll see, just like we did in 2008 to 2011, most asset prices will rise, right? The dollar will weaken, asset prices will rise. And so at some point, whether you own equities, commodities, gold, oil, Bitcoin, whatever, it won't really matter. They'll all go up in price to some varying degree. I actually think that gold and Bitcoin will do very well in that environment. And so it doesn't surprise me that people would want both. But if you ask me which asset's going to appreciate more, obviously that's Bitcoin. Now, why will it appreciate? It's because you're also taking more risk, right? Gold's got 5,000 years of track record, whereas Bitcoin's only got about 11 years. And so kind of the risk reward is there with Bitcoin. But as you get that higher rates of return, you also get the higher rates of risk as well, which gold doesn't have.
Now we have a major event happening in Bitcoin. Some would argue the greatest event for the cryptocurrency, the halving happening in May. Can you shed some light on what you expect to happen to price here in May?
Yeah, so I've been writing about this now for almost a year, really since last like May or June, saying, look, we're headed into an environment where the Fed was going to have to cut interest rates to near zero or zero. They've obviously done that. We've been saying that they're going to have to generate lots of quantitative easing. They're obviously doing that on a historic level, and those two things were to coincide at the same time or near the same time as the Bitcoin halving, which is the incoming daily supply gets cut in half from 1,800 Bitcoin a day to 900. Now, if you go back to 2008, 2009, remember gold drew down 30% in 2008 during the liquidity crisis. But coming out of that, when quantitative easing was announced, et cetera, from 2009 to 2011, we saw a massive increase in price, about 3x, and gold eventually hit an all-time high. Now, imagine in 2009, 2010, and into 11, 50% of the gold miners basically shut off their operations. So 50% of the incoming daily supply just disappeared. It would take a scarce asset, make it scarcer right at a time when all these investors are running to it, and the value of gold would have gone higher. That's essentially what I think is about to happen here. Everyone's going to look for inflation hedge assets, whether it's Bitcoin or gold. As they do that, you're going to get the Bitcoin halving. 50% of the daily incoming supply gets taken away. And so you're taking a scarce asset, making it scarcer right at the moment that everyone wants it in their portfolio. And therefore, I think that it provides this rocket fuel kind of for the future outlook of Bitcoin.
But your forecast is anywhere between 20,000 to 100,000. Right now, we're sitting a little over 6,000. So a pretty wide range there, Anthony.
Yeah, so I actually believe, and I've kind of gone out publicly on record at saying, I believe Bitcoin will hit $100,000 by the end of December 2021, so a little over 18 months from now. The reason why I talk about 20,000 as kind of a barrier is in the absolute worst case scenario, if you're the biggest bear for Bitcoin, one of the decisions you have to make on the lower end of that bound is, do you think Bitcoin will make a new all-time high or not ever, right? And the all-time high being 20,000, it was there for just a couple of hours, really. But if you don't think Bitcoin will never make another all-time high, then it'll never see $20,000 again. But if you believe at least that would happen, that we haven't seen the all-time high ever for Bitcoin, then you're talking about at least eclipsing 20,000. My personal view, though, is that we'll see Bitcoin hit $100,000 before the end of December 2021, though.
Moving on to equities, Anthony, you tweeted that with the pandemic, we're going to see entire industries possibly disappear, including the movie industry. Yet you still gave equities a pretty high rating there. How are you handling equities? Would you be touching them right now?
Yeah, so I'm pretty well known for never investing in public equities. It's just not my forte. I don't like the fact that you don't have a lot of control. You don't have any sort of information advantage, et cetera, over other people. But the reason why I gave equity such a high rating is you've already seen a pretty material drawdown. And so unless you think that either the United States is going to fail or equities are going to go to zero, obviously any sort of recovery you could see 30, 40, 50, 100% type recovery in the short to medium term. And then you could see over, kind of a longer period of time, new all-time highs, et cetera. And so anytime you get an asset that's not going to go to zero, that has a material drawdown, it should perform pretty well over the next kind of 5 years or so. Now, there are specific equities that I think will do even better, right? So if you look at something obviously like a United Airlines, right? One of the things that I think people need to kind of keep in their heads is United used to trade at 80, $85 a share at the top. It drew down to 20, 25 bucks. They did $6.5 billion in EBITDA in 2019. At 20, 25 bucks, it's trading around $5.7, $5.8 billion of market cap. But a lot of people look at that and say, wow, United Airlines is a complete discount. It's so cheap, generational buy. You have to remember, though, that revenue basically disappeared for the company. So as it stands today, you've got a company that's not doing $6.5 billion in EBITDA. They're doing something much, much less, by 80, 90% less than that. And so there's still actually an argument that even at a $5.7 billion market cap, that stock may still be overvalued, right? Even though it's dropped, kind of 80% or whatever it's been. And so I think people just got to be really, really careful about kind of hindsight bias of saying, well, look what the stock's trading at today. It used to trade at this other number. It's so much, it's so cheap. That might not necessarily be true because the performance of the company has drastically changed. And you brought up movie theaters, I think is a great example. In the week, March 20th to 26th, last year, it did about $200 million at movie theaters in top line revenue. In March 20 to 26th in 2020, the movie theaters combined domestic box office did less than $6,000 in revenue. You're talking about a 99% evaporation of revenue in an entire industry in the United States. I just don't know how you come back from that in any material way over the short to medium term.
Right. Well, I guess then my final question to you, Anthony, is, talking about coming back, when could you see us open for business again? How long is this road in your eyes?
Yeah, there's a lot of people who are super optimistic, but all I keep saying is we're not coming back from this as long as all of us are sitting our asses at home. We have a government mandated shutdown of entire industries, of many businesses, and you've got coronavirus, which has ground the global economy to a halt. And that's not going to recover until we get out of our homes. And I continue to say the road to recovery for the American economy and really the globe is to get businesses turned back on and get people back to work. So if you want the American economy to recover, get American businesses back to work, put American workers back to work. And I think you'll see that recovery. It's not going to be a V-shaped recovery because you're just not going to see us going from spending almost no money while sitting at home to all of a sudden spending what we were spending in the good times. I just don't see that happening. So I think we're in for a long run.
So would you do it sooner than later, even at the risk of people's health?
Yeah, so I tend to think that one of the big concerns here is we're faced with two crises. We have a healthcare crisis that's causing an economic crisis. But the problem with a lot of the decisions that are being made right now is we have bad data, right? So if I asked you right now, how many people in the United States have coronavirus? Nobody can answer that question. I can't answer it, and neither can anybody else, because we've only tested about 895,000 people out of the 330 million Americans. As of Saturday, this past Saturday, 895,000 people have been tested. We don't know how many people actually have it. And then even when you look at the death toll, there's a lot of situations where in Italy, for example, 99% of the deaths that have been reported actually had other health issues. And so what ends up happening is we're getting the conflation between somebody who dies who tests positive for COVID-19 and somebody who dies from COVID-19. Now, I'm not saying that this isn't bad. I actually think it's a really serious health issue, and we have the potential to overwhelm the health industry if we're not careful. So we have to take this seriously, and I think it's a good idea that we've actually put these shelters in place and quarantines. But I also think that we have to be careful about making massive decisions with bad data, because no matter how much analysis you do of bad data, you're still going to get bad outcomes. You're going to make bad decisions. And I think just given the lack of testing right now, we don't know what the data actually is, and therefore we can't make good decisions.
All right, Anthony Pompliano, thank you for your thoughts. Thank you so much for joining me. Stay safe, and we'll talk soon.
Absolutely. Thanks for having me. I hope you guys stay safe as well, and we'll do it again soon.
Thanks. Thank you. You can follow Anthony at Pomp, and you can follow me at Daniela Camboni. We'll have much more for you on Kitco.com. Thanks for watching.